think I think I will live, and yeah, it's a pleasure to do this live on a Saturday. Today it's gonna be market products. Um, Wanted to share the well. To be honest, I can't wait to be back in Dubai, so we can be in a better setup. I think hopefully soon. Wanted to share a bit more about the vision today for Proper and how we essentially how we get there. We today, I mean, the big goal behind Proper is to say, okay, how can we leverage crypto tech? Because I genuinely believe in crypto and like the properties of crypto being, having sovereign assets. The in times of war that we see in the Middle East is particularly useful. When you hold gold, try and get out of the UAE with 10 kg of gold. It's not going to be possible. So you have to have it in vaults eventually in Switzerland. But I think, I'm in the space because of asset sovereignty in the first place. Um, for example, if you work with someone in Iran, you'll see that they value crypto a lot more than people in the western part of the world where I'm from. We don't value crypto as much because we take this for granted. But in Iran, you would see that crypto is actually useful because you can't trust the local currency. And I'm in crypto because of I believe that there is a big gap to fill in trust and transparency, and that's what crypto is for in the first place. And I view prop firms as an integral part of the financial product stack, and one that is filled with scams. And that's where I see a big opportunity, is to come in as a very transparent actor. Let's try and do the things right. And that's why Proper exists today. And today we apply it to the perp market. So Hyperliquid and HIP3 is growing substantially. We see it with the oil contracts that's having hundreds of millions of open interest, and that's trading on weekends. And I believe that it's the right time to build on top of this infrastructure, and that we can, effectively by building on top of HIP3, we come in with a much better UX than anything that's out there in crypto today. That's relying on DX trades or meta traders or other exchanges like Bybit or like any other prop firms that builds on top of an existing infrastructure. We essentially will have the best product offering. HIP3 is going live either this weekend or Monday on our stack. So today, when you look at the offering, you see that equity and commodities are coming soon. And we will list all assets that have an open interest of above 2 million. That's the current listing strategy that we have. And in terms of the bigger scope of what we want to achieve is we want to first make sure obviously we've got everything to prove in this market, so we're not going to go and attempt to look at other industries. But the core thesis is that we believe that there is I believe that there's a place for a product that finances edge. So if someone is really good at something and stands out, it's like someone that's 1 in 100, that this person should be able to access more capital. And whether this person is actually a person or an agent, it's basically being able to finance an edge in the market. But today it's just hard to trust these parties because there is no transparency. There's no verifiability. We can't verify, the data that's out there. And we're happy to compete with any other actors, because I believe that the edge that we have in our product specifically lies in three things. So in whichever product stack that we end up shipping with Proper after Hyperliquid is transparency and trust. There is a reason why I'm doing the streams, is basically being out there, and just showing that, hey, that's how we build it, that's how we think about it, because the users, they need more transparency. They need trust that if you're taking your time to craft an edge and accessing more capital, you need to trust the underlying protocol. And that's why I'm putting my face out there. It's a risky play for me, I understand, but I think it's one that will make a difference for Proper. And so you have transparency of the team, but you also have transparency of the underlying. So, for example, we're building the API right at this moment, to tell you about everything, all of our stats. So if I go to localhost 3000, just want to check the stats endpoints. Yeah, all right, so the path is stats. So v1 stats. That's not deployed yet, but that's the things that we're working through. Is when we meet transparency, you obviously have verifiability at a blockchain level, but also internal to systems, how we build it. So for example, and that's a very quick mock-up here, but you'll see total revenue, change pass rate, the new account, the new purchase, what's the volume, what's the each trade that's taken by users, what's the aggregate open interest, what's the risk management for the firm, and what's the liquidity conditions of the firm. So basically building, in the open and sharing transparently. And I think that's an edge. I really think that for that type of product, it's going to make the difference. And my rationale going into this is, if you have a product that shows everything and where the team is transparent, why would you use, if we assume all else is equal, so product is similar, why would you use a product that's different? And that's not doing it. Superior UX, I think it's a differentiator. The ability to ship fast, and hopefully we're showing that in the velocity of new functionalities, we are able to deliver something quick with a great user experience. Today you can go and check out the platform. Obviously it's still the very early days, but we're doing our best so that we craft the best user experience for users. And lastly is user alignment. A lot of people ask me about the token and why a token makes sense in the first place. Well, a token makes sense because I believe that the next era of product won't be able to compete at a tech level. And they will be able to compete on two levels. One is transparency and the other is user alignment. So if I use product A that gives me nothing versus a product B that gives me actual ownership into the product as an early user, that's essentially the same thesis as Hype, as why would you use Hyperliquid vs another perp DEX, is because, well, sure, the platform is better, but you also know that you're going to get rewarded. And I believe that Hype still has 30+% in community rewards. And so you're building it, you're using Hyperliquid because you feel very empowered as a user. And that makes you a core part of what makes a product today. And that's also why I think a product is necessary. Well, a token store is necessary for this, is because that ensures that you have 100% user alignment with the platform. And today we're looking at Hyperliquid, but it is clear that if we look at Proper as a financial layer, we obviously don't want to coin us as such today because it's still far-fetched and it's not going to become obvious until year end at least. But we basically want to become the infrastructure that is helping anyone with edge get access to leverage, and leverage in the sense of more financing. So today we apply it to perps. It's the perfect time for it at the moment, but we will apply it to other ways of expressing trades or edge, and meme coin is one of them. So for example, there is this platform that's called Solana Founded that I believe launched yesterday. And for example, like when I look at this, I still view a big transparency gap. And that to me means that it's worth tackling for us. Because again, same assumptions on the transparency and trust gap and user alignment. So for example, this platform that launched yesterday, and I have to respect every product that gets out there, but for example, when this platform claims that in 24 hours they've got 45 million challenge account fees, well, there is no way to trust them. And like it's impossible, in fact, for me to verify this. We could do some digging into, for example, you can go into the, we can actually try and do this. If we're trying to get funded now and check, how much of it is on the actual blockchain, we could try and see exactly how much has been accumulated directly on chain. I'm actually not sure it's possible, but like typically, it's one of the things that what we would do in our case is show you exactly where the money is landed, hasn't landed, sorry, and in a way such that you don't have to trust us, you can just verify. And when you make statements like this, 45 million of dollars accrued, but you have no way to verify that as a user, then you don't really know if you can trust the platform or not. That might be a scam. No one really knows. But what I'm saying is that there is value in being a transparent actor in this space. And these are areas that we're looking into. How can you, like, if there is an edge in any market, basically how can you intervene and provide an infrastructure to help these folks scale their edge. Obviously, the model works in such a way that most people lose, and that's just the reality of the model, and that's also why we're interested, is because it's a high margin business, and that should be clear to everyone. But we still believe that for the best of the best, so the one in 100, there should be a transparent infrastructure that they can trust to help them trade. Now, for example, on this platform specifically, I don't know, like you have to trust them, but I'm not sure there is any information about the team or anything like this. So it's just hard for us to, like me as a user, to trust them that they'll do the right thing. And we will tackle this at some point. I just don't know when specifically. There's no ETA on this, and we don't want to, we've got so much to prove yet. But on the roadmap, what you can expect, and I did highlight this in my post, but you can expect to have us in any markets that provide an edge. And obviously we'll stick to Hyperliquid for now because we still got so much to prove on this market. And it's going to be a challenge. I'm very much aware that the key for any prop firm is the distribution, is what's your reach vs other users. And that means we have to, we have to, like most of the work has to go in this. It's building the affiliate network and building the right user base of affiliates, and that's where I would say definitely more than half of the time should be spent in aggregates to scale the prop firm. Um, and that's what we're doing at the moment. It's making sure we partner with the right persons to make sure we get the access to the right users. So at the moment, we're fine-tuning the affiliate program to make sure we're on par with, and in fact, not just on par, but above par with the legitimate actors in the space. Obviously, in prop firms, you have a lot of scams that offer crazy terms. Like for affiliates, for example, they would give them half of the revenue, but we can't compete with them realistically because we know that this is unhealthy for the business and that just basically wouldn't work. We've had some comments for example, why is our challenge priced that way when other companies offer a third of the price, for example. It's because most likely these are scams, and that's the same that happened in crypto with CeFi actors like Celsius, where they would offer crazy APY vs other legit actors, and we can mention Swissborg here that always kept true to the yield components and never tried to inflate stuff too much. And we'll try and check the hard routes, and which it's definitely going to be harder, but we can't try and claim to build a transparent prop firm and then just follow the same path as the other scammy ones. So it's going to be an exciting journey there. I think the journey is pretty exciting so far. And if you're watching this and you want to be on the affiliate network, you can go and reach out to us. We'll be transparent about the terms. I think transparency is going to hurt at some point because every prop firm actor there is some kind of shadiness component to it, mostly because of the actors you have to deal with. Like the underlying traders, they don't necessarily want to have the prop firm mention the deal terms. And so we'll have to do our best here to be as transparent as possible. But we already have traders that mention, hey, don't mention the deals I'm getting. And for us, we have to optimize for, we still have to optimize for growth. Otherwise, what we're building is just not worth anything. Like a prop firm with no users is obviously a worthless prop firm. And so you still have to, abide by the market. And so the main focus for me today is building the stats endpoints. So this endpoint specifically, which will give you, I haven't really started to work on it, but we'll do it after the stream to bake the most important stats about the prop firm today. So an example of that is we'll try and bake the upcoming data into this API. So revenue breakdown, the aggregate equity for paper traders. Today, we're only doing paper trading, and actual trading is not going to start until before the next 6 weeks, give or take. P&L distribution, evaluation funnel, payouts, we won't have that before the next 6-7 weeks. Latency, trader retention, and then leaderboard. So we'll bake this into a couple of different endpoints, so that even at the beta stage, people see the transparency that we're working towards. Transparency is core USP, so we'll have to, we just have to do our best there. Now let me actually check if we have any comments. No, all right, that's good. Now we'll move to market overview. As I did highlight my views on the markets yesterday. And yesterday we did highlight that we were not so sure about the BTC strength going into like, it was not Friday, it was Thursday, and we said we doubt the strength because we don't know how much of it was led to STRC because of the ex dividend date. So I think we have STRC, like the live page, and basically yesterday we had no meaningful inflow, if I understand correctly. So like the way it works is, let's try and just understand this UI specifically. But the peak was Thursday. And my understanding is that STRC as an instrument for BTC, like if you take the 100, that's basically the premium to the price of the instrument. And as long as it's above 100, then you can buy more BTC. So, for example, on the 12th, so Thursday, you like basically this product was max utilized. But then after it was, basically after it was just going nowhere. And this lead up here was because of the ex dividend date, which again means that you could buy the instrument on the day and still get the coupon. And then our assumption was that, okay, then that fades away because then you have no incentives to hold it. And then same is going to happen next like 30 days or so. So we've identified this, as a sort of the peak momentum going into STRC. And as such, we concluded also that it was the same stuff as the lead up here because of MSTR. Like, for example, the MSTR that was announced on the 9th was announced at 71 K average. So basically they've executed somewhere here, and you can assume that the CVD there was led to MSTR. And we basically assume that it was the same going into this move. It's people that speculated that STRC would buy a lot of spot BTC plus actual spot BTC purchase of STRC. And I conclude from this that it is what kept the market relatively strong. And we should not be, I think, complacent with the fact that stuff can change over time. And recency bias on relative strength, if I have to look deeper into STRC as a product and understand when can this be turned on again. My assumption is that if we are to replay, well, let's try and actually understand this together. And let's try and see basically when is the most momentum going into this, and then how can we best understand this to get a view on the market. I'm just interested in the timing of this. And so I understand that this instrument works as long as it's above par, so it's above 100. And so basically above 100 and it's good for BTC. Below 100, then you have no value accrual. And what I can get wrong is if you don't really understand this instrument and you have like a lot of shorts that spiking up, liquidity is still very thin on the market. So things can move pretty quickly. Like, you can shoot to like 85K pretty quickly. So I'm just reading through this. I should have read this before. Okay, in short. Okay, I understand. I mean, I understand the part. I just don't understand when, like the game theory there and like stocks. Okay. Okay, so the arbitrage to 100. I'm not sure how the arbitrage. Is it through selling MSDR? Can we actually prompt ChatGPT to help us understand? What's the game theory of SDLC? Then the MSDR product. When is the highest inflection point for the product? Because I think you genuinely need to understand, like, oh wait, I don't wanna. I'd have to log into my cloud accounts. So let me just come back quickly, and then I'm gonna open a new window. My Wi-Fi is super slow here. Alright, so that's not collaborating with me today. So that's a bit annoying. Let's see. I think someone on X did a big article on this. Let me check. Let me check if we have something there. Yeah, okay. There's this guy that did a Substack on the article. So let's try and understand a bit more how this is gonna help BTC. All right, cool. So I'm gonna share the article here so we can just have a read through, and then so you see a bit more how I function. So I'm reading through this. Hopefully you see it on the screen. Okay, so what you understand is there's a big correlation between weekly volume in SDRC and the ATM. And we see a similar period that add up because of the X dividend date, I assume. Yeah, all right. So the constraint of the strategy is that SDRC must trade at 100. So we're currently below 100, if I'm not wrong, which makes sense because no one has incentives to buy at the moment. But I want to read into the dividend structure and see if that is about to change, like if it's a time-weighted approach. All right, so constraint of that. Okay, so that makes sense. The NAV above 1. Dividend rate. Okay, I mean, I don't want to check what happens if I assume then what happens if they do the arbitrage is if you have a below peg structure, then I suppose they are selling MSDR to buy back SDLC. All right, so they also increase the rate. Honestly, I don't like this structure long term, but they're increasing the rate if the peg is below. Okay, and so what they've done so far is to increase the rate. But where is that yield coming from though? Okay, confidence. Okay, so if everyone tries to escape STLC, then you have a big sell-off. Okay, and then they should assume they try to gap this with the yields. But where is the yield specifically coming from? Is that through the MNAV increase? Okay. Okay, but so what we're saying is this instrument though is dropping anytime you have so it's basically pretty reflective on the crypto asset. I think that's what we want to understand is it's exacerbating the move up and move down. And so basically whenever things look good, that stuff can trade above 100, so we can press the ATM and buy more. And that's also good, like, I think whenever this stuff is trading below 94, in the short term, we can assume that there will be a sort of relief. So I think we can take this as a good indicator of, market capitulation short term. Okay. I really don't like the structure in the sense that, it's. I understand they increased the BTC per share to MSDR, but if people lose confidence, then it's further downwards action into MSDR. All right, so the issue can come if you increase the yield too much and then you just don't have. I believe they have good cash reserve, and I'm sure they will replenish the cash reserve in the bull markets. Yeah, I don't think this can replay a Luna type stuff. All right, so, but I'm still not sure. I haven't spotted this, but what's the inflection point? So if the yield is distributed always at the same time, then there's like I just don't want to get caught with being too bearish when STRC is clearly showing great demand, which I mean you can get cooked if you're too bear hold when you have someone that's pressing the ATM really hard. So let me just try and find out, and then we'll wrap this up for today. If someone has the answer, but as far as I understand, there's still this game theory, so we can. I just wonder when is it likely going to trade at 100 or above, and I think at the like short term, you can pretty much go long BTC when it's 100 and short when it's below 100 because you know exactly what happened with the DATs. And for example, if Bitmain were to do the same on ETH, I think it's safe to just go long ETH if they were to release a similar product. You don't want to try and beat the flow. And then we can probably like do a tool that would like on tools.proprXYZ to tell you when it's likely that you'll have a big influx on BTC. I might actually try and build this today even. That might be interesting. So I think that's it for today. We'll end up here. Maybe build this product. I think I'm interested to know if there is any correlation between spot CVD and this. I'm pretty sure there is, and I think that'd be great value add for our traders. Cool. So thanks everyone for tuning